Hey everybody, it's Kemosabi here, trying to update you with a video from patterns that I see, potential trade setups and opportunities. What I'm looking at right now on the 8-hour chart is a potential bearish pattern, but not too bearish, but bearish enough. But you see that ABC right there, right? And what came before that ABC was this move. That could be that move. And we're about to repeat this, coming down here and attack the lows, bounce up and attack the lows again up until November. Now that might make sense from a cycle standpoint, seeing as our bottom in 2023 or 2022 was November. So that was like November 17th or November 22nd, somewhere in there. And that pattern would match that to have a mid-cycle low right then. Just something to watch for. I'm not quite convinced of that until I get a daily closure below 50K. So if a daily closes below there, it invalidates my bullish pattern that I'm expecting. But there's definitely a valid sell setup right there. That says that this high won't be broken. So any break above that high, and it invalidates the bearish setup, the sell setup for me. So break above that and hold above it. Hey, that's happy days. Let's go. But until you break above that, you're still operating on lower lows, lower highs. But like I've had in previous videos, I did like the volume spike on this move down, and it came back inside the range. So that's good. Even if it stays above this, is kind of what I'm expecting for a bullish setup. We'll see if we get it. So for the opportunities, let's start building this chart here. I'm going to mark off this previous support because that may become relevant in the future. I'm also going to zoom in here. But remember that low, I have it marked off at 53,474. So it's in that general vicinity that I'm kind of looking at. And right here, I'm going to draw my consolidation box. We can put it right there. Something like that. So now just looking at that locally, you have your consolidation, swing failure pattern. Now you're back inside the box. Normally what happens with that is we tag lower liquidity. So I think that's what the market is trying to look for here. It's trying to get some more accumulation going or some more liquidations to be able to push higher. But it's all dependent on being able to start closing higher highs and higher lows on like a weekly. That would give me confidence to that, but the weekly is still not closing a higher high yet. It appears to have put in a higher low, but we'll see if that holds. So now we'll take this down to the 4-hour chart and look for the opportunities. A concept that I've learned from the Jim of All Trades channel, which he's live on YouTube, dissecting charts from an Elliott wave perspective on Sunday nights. So check him out. I'm in there in the comments section, helping him moderate. But right off the rip, like Jim says, what do I see? Initially, I see that 3-wave move right there. So dissecting from that, if that's 3 waves, maybe what we get after is that. And that would be your sell setup. And then what comes after that potentially is this move coming down. And if you would measure that leg and project from the potential sell setup, your 1-to-1 target becomes right there. And from a liquidity standpoint, it kind of makes sense because you'd be taking out this liquidity, you take out this liquidity. We've already taken out this liquidity. So now any break below our current wick low, and this is the target that I'm expecting. It adds confidence to it because you've already taken out this liquidity. If you break below that, you're searching out this liquidity and potentially these liquidities. So from a trading perspective, this wick low, if that gets violated, targeting that and overextension to that, which gets us our 1-to-1 target of an ABC. Looks good to me. and we'll see if we get it. There's no guarantee that it goes down there, but if it does, I know what I want to do if it does get down there. So it gets down there, and this would be my buy setup. Stop loss on a knife catch would be, of course, the 49K lows, but I kind of want to manage risk a little better than that and wait for a reaction, and then this becomes my stop loss. And it might come down, wake you out again, and then do the same thing again. And then we'll have to look at the patterns and see if we keep getting sell setups. But a 15-minute or a 1-hour higher high close should get me in the trade. You potentially then have a breakout thereafter that you can add to. But after taking out that liquidity down here, price reacts, goes back up. You don't want to see this area broken. You would actually want to see previous support hold as support again. And if you start getting below that again, it would appear as though you're taking out that wick. If so, you're hunting the 49K low, which means you're going to wick below it or potentially dump much, much lower. So yeah, manage risk appropriately. Things can move down pretty quick. They tend to move down faster than they move up. So after tagging this line, I would want to see support hold, and I want to see this high get broken. Currently, you do have higher highs and higher lows happening. It would be great to maintain that structure. The liquidity says you want to come lower if this wick is broken. So long and strong from there. Invalidation is that wick from yesterday morning. Anything below that, and I'm targeting 53.5. So let's build this chart out further. Let's take a trend-based fib extension, and we will measure this leg going up, assuming that is some kind of three-wave ABC. We'll measure that to there, projecting from here, and a potential C leg here would get you up to, let me get it labeled for you here, A, B, C, somewhere in this vicinity. And then what comes after would be potentially the repeat of this. Invalidation for me is 63,165 on a sell setup. Break above that, I would not like the sell setup as much. It would have to make a different pattern and kind of continue to push down. If it breaks below this wick, then yeah, I'm targeting 53 still. It could do it from right where it's at. I wouldn't be opposed to that over this long weekend. Maybe it happens over the long weekend, or maybe we get a massive short squeeze over the weekend. You really never know. Now we'll take a trend-based fib extension to measure the leg down and project from a potential C leg that goes there, and the 1-to-1 to the 1272 gets me right in the range of what I'm looking for, previous support, which would be 53,000 to 54.7, somewhere in that vicinity. So for me, for the buy setup, my invalidation is 50,900. You get any closes below there, and the pattern's not looking good for a buy setup. So that would be my invalidation. But yeah, looking to bid this area if we get down there, especially if we break below that B wave right there. Break below that, I'm anticipating that. If we break above the highs, then happy days, you move on up. So for a bullish trend, what you really want to see is the invalidation of your sell setups. For a bearish trend, you want to see invalidations of your buy setups. So that kind of lets you know where you are in your trend as your setups become invalidated, which is why your stop losses and invalidations become so key to surviving in the game of trading. It lets you know very, very quickly you're going the wrong direction. All right, taking this bad boy down to the hourly chart. Definitely got that three-wave move. Looks good. So what we got coming out of here is reminiscent of what's happening here. So maybe we get that pop up just like that. Then, yeah, maybe you call this a WXY instead of an ABC. I'm not really a stickler for labels. It's more for demonstration purposes. And then out of that, I would watch for a rejection like this, coming down. And then three waves back up to there. that would actually be your sell setup. Would be a great one. Your stop loss would go there. And if it comes to pass and the trade works out well, I'd expect this sharp move down, just like that, to break this liquidity. And then this grindy action to bottom out. Sometime around Labor Day, probably Monday, Sunday, something like that. Maybe Tuesday, Wednesday, it grinds, and it grinds down to target. It could also do the opposite, where it kind of hovers there, and instead you get this grindy stuff up top. Then it wicks down. Whoosh. So either one works for me. Like I said, I'm okay with the sell setup. Overall, macro still fairly bullish as long as daily candles are closing above 50,000. That's where my larger time frame setup invalidates. And then we'd have to look for another pattern, see what's happening. So quick little update there, kind of what I'm looking at and how I construct my charts, how I look for the opportunities, and how I find my invalidations. Don't risk more than you're willing to lose, because this market can wipe you out quick. That's why we like trading it, because of the volatility. But protect yourself and have your trade setups and invalidations. Yeah, hope that was helpful, guys. Like and share, subscribe, all the good stuff, and leave comments, ask questions below. Do your worst.